How much would $10,000 invested in Tesla stock 5 years ago, in September of 2019, be worth today? Tesla is now included in the Magnificent Seven group, which consists of some of the most dominant and innovative companies the world has ever seen. And for the past 5 years, its share price has skyrocketed by 1,043%. But if you had bought one share 5 years ago, you would have much more money than the result from simply multiplying $10,000 by 107. The real result is much higher. So, in this video, right away, I will break down how to do the math and how much would be worth $10,000 invested in Tesla stock 5 years ago, and then, we are going to talk about the company, what drove this insane ride in prices, and also if it is still a buy stock. Now, let's find out how much would $10,000 invested in Tesla stock in September 2019 be worth today. First of all, we need to look at the magic number, which is 15. Just hold a moment, that you will understand. There is an important factor to consider before any calculation, which is that Tesla since 2019 has executed two major stock splits. One, on August 31, 2020, 5-for-1 split, and another, on August 25, 2022, 3-for-1 split. A stock split is a corporate action in which a company divides its existing shares into multiple new shares to boost the stock's liquidity. While the number of shares increases, the total market capitalization remains the same, meaning the price of each share is adjusted downward proportionately. Therefore, considering these two splits, if one Tesla share was bought 5 years ago, by now, would have turned into 15 shares, and this is the magic number we were looking for. As you can see on the current chart, on September 2019, one share of Tesla stock was at $16. But, in order to find out the real value of this math problem, we need to adjust the share price to both major stock splits. So, we have to divide $16 by 15, the magic number, revealing the real adjusted share price of $1.06, and that would be the real price from September 2019. If we divide the current stock price $216 by $1.06, in reality, Tesla's stock price has soared 2,030%, or 203 times, from 5 years ago. So, a $10,000 investment in Tesla stock, made on September 2019, considering the real adjusted price before the two stock splits, would have purchased approximately 9,433 shares. Which now, with the current price of $216, would be worth $2,037,528. If you did it, congratulations, you're a winner. How Tesla achieved its 174 times stock price growth. Tesla's extraordinary stock performance is a testament to its rapid business expansion and market dominance in the electric vehicle industry. From 2010 to 2023, Tesla's revenue grew nearly 830-fold, and the company achieved significant improvements in profitability. However, investing in Tesla during its IPO was considered a high-risk gamble. Even CEO Elon Musk admitted that the company was more likely to fail than succeed. At the time, the market for electric vehicles was largely undeveloped, with hybrid cars like the Toyota Prius leading but lacking excitement. Tesla's vision of creating stylish, mass-produced EVs carved out a new market segment, unchallenged by major automakers, who initially underestimated the potential of electric cars. This bold approach has since propelled Tesla to become one of the most innovative and dominant companies in the world. Scaling in this intensive auto industry is notoriously difficult, but Tesla has capitalized on its first-mover advantage. In the year 2010, Tesla delivered fewer than 1,600 Roadsters. By 2023, the company had delivered over 1.8 million vehicles, including newer models like the Model S, Model 3, Model X, Model Y, and the Cybertruck, none of which existed in 2010. Tesla has also diversified into other areas, including insurance, charging infrastructure, and energy solutions. In 2023, its energy division alone generated $6 billion in revenue, more than 51 times its total revenue in 2010. Investors in Tesla have had to weather years of volatility and financial losses. The company didn't report its first full-year profit until 2020, a decade after its IPO. However, those who remained patient and held their shares through the ups and downs have been handsomely rewarded, although identifying the next big investment opportunity remains a daunting task. Despite this success, Tesla's stock has still fallen 46.68% from its all-time highs, yet early investors remain in a strong position. Today, Tesla is a leading name in the electric vehicle market, with a market cap of around $730 billion, placing it among the 10 largest public companies in the USA. However, its medium-term performance has been underwhelming. Despite a significant rebound in 2023, investors who bought in late 2020 are roughly breaking even, while those who purchased at all-time highs in 2021 are still down over 46.68%. Tesla's impressive return since the IPO translates to a compound annual growth rate of 41.9%, compared to the S&P 500's annualized return of 12.4% over the same period. To put it into perspective, a $10,000 investment in the S&P 500 on the day of Tesla's IPO would now be worth $51,185, just 2.55% of what an investment in Tesla would have earned. Is it possible to identify stocks that will outperform the market? While Tesla's transformation from a niche startup to a global leader is remarkable, replicating this success is exceedingly difficult. IPOs are often risky, as companies aim for high valuations, and newly public stocks typically underperform in the short to medium term. Identifying stocks that will outperform the market is very challenging. A 2018 study by Hendrik Bessembinder found out that only 4% of public stocks between 1926 and 2016 accounted for the entire net gain of the US stock market, while the remaining 96% barely matched the returns of US Treasury bills. Tesla deserves credit for disrupting the auto industry. Grounded on the belief that the world needs to reduce carbon emissions, the company introduced popular EVs to customers across the globe. And this spurred heavy investments in research and development among legacy car companies. But, is Tesla stock still a buy? Tesla holds a commanding 50% share of the US EV market and currently offers a range of 5-passenger vehicles, with a more affordable model expected next year. One way to gauge a company's quality is by identifying its economic moat or sustainable competitive advantages that drive superior financial performance, and Tesla appears to fit the bill. Tesla's competitive advantages. Tesla's brand is one of its most valuable assets. The company has consistently been able to charge premium prices for its EVs, contributing to positive earnings since 2020. Additionally, Tesla's cost advantages in manufacturing have bolstered its profitability, allowing it to produce and sell cars at a profit, a feat that many of its competitors struggle to achieve. Automotive revenue accounted for 78% of Tesla's sales in Q2 2024, but long-term bulls hope the company's business model will evolve. Tesla has been advancing its AI supercomputer capabilities with the goal of achieving full self-driving technology. This could pave the way for a robo-taxi service, potentially unlocking a significant new revenue stream. Tesla's much-anticipated robo-taxi is scheduled for the 10th of October. The event has already been pushed out from August, and the fact that it's now taking place at a film studio in Hollywood only adds to the intrigue and anticipation. The hype around robo-taxis is likely to reach a fever pitch over the next few weeks, so, would it be a good opportunity to buy, or, would be better off to wait for any potential hurdles and risks facing the companies trying to claim their slice of the market? Challenges to Tesla's growth. Tesla faces several challenges that could hinder its growth. A key issue is the company's slowing growth rate. In the last 2 quarters of 2023, Tesla reported single-digit revenue growth, which turned negative in Q1 2024 before recovering to just over 2% in Q2. Industry experts cite weaker than expected demand for EVs as a primary factor. Higher interest rates have made financing a new car more expensive, causing consumers to pull back. Additionally, concerns about driving range and limited charging infrastructure remain significant barriers to EV adoption. Tesla now resembles a traditional automaker, struggling against fierce competition from both domestic and international rivals. In response to economic pressures, Tesla has implemented multiple price cuts to sustain demand, which has taken a toll on its financial performance. The company's gross and operating margins in Q2 2024 were significantly lower compared to the same period in 2022. Despite trading 46.48% below its peak, Tesla remains expensive with a price-to-earnings ratio of 63, making it the most expensive stock among the Magnificent Seven despite weaker fundamentals. Tesla has delivered strong returns for shareholders over the past decade, but whether it's a good time to buy the stock remains uncertain. Technical analysis. On the technical analysis, since January 2023, Tesla's stock price is ranging within a rising wedge triangle chart pattern and could break out in either direction, depending on future developments. I am not a financial advisor, but my personal investment strategy would be to wait for further information on the charts to confirm a breakout above or below the rising wedge before making any investment decisions. In summary, Tesla's rapid rise from delivering fewer than 1,600 vehicles in 2010 to over 1.8 million in 2023 reflects its successful first-mover advantage, brand strength, and diversification into insurance, charging infrastructure, and energy solutions. Despite becoming a dominant force on EV market and rewarding early investors with over 2,000% of profit, Tesla has faced significant volatility and financial challenges, including slowing revenue growth and stiff competition. Its stock is still down 46.68% from its peak, and with a high price-to-earnings ratio of 63, it remains one of the most expensive stocks despite weakening fundamentals. While Tesla's past success is notable, the stock's future performance is uncertain, and technical analysis suggests waiting for clearer signals before making investment decisions. Thanks for watching. Good luck and good profit, by Edward Cash Trader. Please read the disclaimer in the description below. You can support the channel by subscribing and turning on notifications. Let's grow the channel together.